with Bloomberg in conversation with leaders from MiniMax, HSBC, 3C AGI Partners, and SC Ventures. Please welcome this incredible panel.
Well, good morning to you guys. Good morning to everyone who's joined us here this morning. And I think that this is really, it's a perfect topic, actually, for FinTech Week here in Hong Kong, because I think it really very much goes without saying. We know that AI is the flavor of the moment. It's the flavor of the decade, possibly. But we're just talking backstage about some of the deals that were signed overnight. Amazon with OpenAI, for instance. There was Microsoft with the Australian data center provider, Iron, as well. So there's really a lot of deals going on at the moment. But at the same time, this session is very much going to be focused on AI and the intersection with the finance world. So we've got two great panelists here coming from that basis specifically. We've got Alex Manson there from SC Ventures, also Ian Glasner from HSBC. And then we've also got Ma Shui joining us from MiniMax. MiniMax, many people might be familiar. It is one of the leading LLMs in the Chinese space. And then we've also got Esther Wong, of course, giving us her investment perspective from 3C AGI Partners as well. So thanks very much for joining us this morning, Mars. I think we can start with you and just give us an update on the developments that you're seeing in AI right now.
Right. So over the past 3 years after the launch of OpenAI's ChatGPT, we've seen remarkable progress in this industry. It's speeding up. And I think the highest visible thing for this industry is it will move just as fast, if not even faster, at least for the next 3 to 5 years. The fundamental driver of this is the improvement of the model's intelligence level. So for each time we're seeing an incremental improvement for a higher intelligent model, we will see it will unlock more use cases, more users, and more real productivities. So for this trend, it will continue because we are just at the very beginning of the model development stage. So for the model training process, it's like digging for mines. It's like mining for gold. So we have several known gold mines, and we are digging deeper to scale it up. But during the process, there will be new unknown gold mines that we discover. And now we are just, the current status is we have several gold mines, and we are still at very early stage, and there are still new future unknown gold mines to discover. So it has a really long way to go, long runway to go. So that's the main theme. The theme is the continuous improvement of the intelligence level, and it will drive the all use case in this industry. And the second interesting for this industry is the number of players who stay in the game to continue launch the frontier models actually are not becoming larger. Actually, it's becoming smaller. The key barrier of this is not just capital or a group of talent. It's actually an R&D organization who can keep up this pace of this industry to continuously deliver the frontier models, because the industry itself is moving really fast. So keeping up the pace, quick iteration, and has a good organization efficiency to move as fast as possible is really the key.
So Alex, I'll take it to you then, because I think Mars is making that distinction. You've got AI as the foundational technology, and then you've got AI. What are the use cases actually, and what are those gold mines? And we can get more on that. But what are you seeing right now, and what are you working on at SC Ventures as well?
So that's a really important distinction for a start, which is this foundational technology. This is what you're doing. And our vocation isn't to do that. We are building on this the same way in digital assets would be built on blockchain, the same way we need to understand what technology does to finance. Our job is to serve customers the way they want to be served, address societal needs, and do what financial services are supposed to do. And so it's the use cases that that are enabled by the foundations. I'd say a number of things within banking. One of them is number of capabilities, process automation, client service, fraud management, you name it, a number of use cases. We have gathered some 1,000 use cases across the whole group, Standard Chartered, which we're helping curate, of which we validated a couple of hundreds, of which we're buying some and building others. I would say a big chunk of what's existence, it's just a use case. We can buy capability for it, and we will if it already exists. In some very rare instances, nobody else can build it because we have contextual knowledge about it that most people don't have. And so we want to go and build it ourselves. And then we end up building businesses with AI at the core, with some foundational technology at the core, with the purpose of serving a client. Corporate education, from corporate education to financial literacy to the masses in an immersive environment with AI avatars. It's a joint venture we're incubating with INSEAD. Validating carbon credits, having validated green financing contracts, and having the ability to trade such carbon credits with, on top of it, some capability to understand adverse media on the carbon footprint of a supply chain. That's a very specific use case. We're incubating that venture as we speak. Regulatory change, right? So something's happening somewhere on the planet. Some regulator has put in place a new change, has to translate into policies, and that's a mix of understanding how to do it, but also the contextual knowledge about banks and regulations. We're building, incubating this, and it's called RegWise, as we speak. So very specific use case where we think we have an edge building it that others don't, and otherwise it's everywhere and getting the capability so we transform ourselves as quickly as possible, and ultimately with a view to serve clients and do what financial services are supposed to do in the first place.
Ian, I can see you nodding there. Is what Alex is saying making sense to you? What are you doing over at HSBC then?
Yeah, it absolutely makes sense. At HSBC, we are laser focused on delivering responsible AI to do one thing: improve customer experiences. And there are a few key areas that we think will be able to make that happen in the near term versus some things that might have a longer outlook. Those areas include KYC and onboarding, credit, lending, and underwriting, our contact center, improving the efficiency of engineers in writing code, or even just simple generic productivity. When you think about AI today, it is largely using a large language model, MiniMax being one great example of that, and then doing function calling, right? So it's not necessarily fully autonomous agents that are goal-oriented. It is more simplistic workflow that is built in to a large language model and allows you to execute your task. And those 5 areas that I said all feel in the near term like areas where we can deliver better customer experiences quickly.
I guess delivering better customer experiences quickly can also sometimes carry a cost. And Esther, you're just back from the Middle East this morning, and I know you were speaking with some financial institutions there. What were some of the pitfalls that you saw or heard about?
Well, I think when it comes to AI, Ray, for my own purpose, for our investment purpose, we actually focus a lot on the basic infrastructure. So we don't invest in the application itself. One of the reasons is because I think the most important aspect of application is data. And unless you have very, very proprietary data, you cannot create the best application. So in this case, I completely agree with Alex, because you can actually have access to the whole database and create very, very specific, using those specific proprietary data to create a product that tailored to your customer. So that perfectly makes sense. Now, that being said, though, I think the use of AI has potentially 2 pitfalls I can think of. Number one is there's a lot of, when it comes to AI, the number one ingredient is data. And then when it comes to data collection, there has been a lot of biases. Now think about it, right? What do we use to train models, including MiniMax, including ChatGPT, including you name it, right? You basically crawl the information from the internet. So think about the internet. Internet has been existing for the last, say, 40 years. Most of the majority of the data input on the internet is from, no offense, like white people between the age of 18 to 55. Okay, so you see there's a huge data biases. Minorities like myself or like women, there's a very, very little data that can accurately predict what they would behave. but there will be substantial, overwhelming amount of the data that AI collects is based on one specific race profile. So I think it's in AI's role to make sure that these kind of biases, instead of being exaggerated or exacerbated in the age of AI, but more importantly being addressed so that different voices have the fair share rating. Okay, this is very important because again, another ingredient for AI is the feedback loop, right? So when something goes right, it will keep doing it. When something goes wrong, it will stop. So what happens is that if you don't have a very representative set of data that represented most of all the users, what happens is your biases will lead to, say, less lending for specific minorities, less lending, lower credit rating for a specific zip code. And as a result, that person or that zip code will have less data. So that feedback loop will break a lot easier. So I think it's very important that AI can address that.
I was just going to build on this because I agree as well. I'd say for banks specifically, financial services broadly, challenge number one is data in implementation. And I'd break it down in three things, which is security, ethics, and hygiene. Right? Security is, as a bank, I will keep your money safe. Well, I should also keep your data safe. And you used to go rob a vault because that's where the money is. And I can see how you could go and rob a bank because that's where the data is. And that's unacceptable, and so you need to keep it safe. Number two, and that's, we're dealing with it all the time. It's not a question of if, it's a question of when and how you deal with it and all this, but it's a priority. Two is ethics. You refer to it in terms of biases. I would just add, use data for good, in order to serve clients, in order to improve client experience with their consent, but an element of awareness of what it is you're signing up for. So an element of AI for good, as you would say, tech for good, as you would say, business for good, as opposed to anything different. So just conduct of business and ethics. And then hygiene, which you're alluding to, which is, if your data is bad,
biased,
then biased or just
polluted,
poorly organized,
yeah.
or then your output will be accordingly bad as well. And so these three things go to the role of any large organization, any organization really, of the data officer, and organizing ourselves so that implementation is possible, because you need that foundation too, next to the foundational technology which you're building. You need these two foundations to kind of work together and ultimately create valuable use cases. Without it, it just doesn't work, right?
I think for foundation models early on, data quantity was actually more important than data quality. And I think now finally in 2024 and definitely in 2025, we're seeing that shift change for foundation models. But it was never not the case in enterprise. So to take a foundation model and actually make it relevant in an enterprise to deliver value, it was always and still is data quality over data quantity.
Mars, what's your view on that as sort of being more at the coalface, I guess, of how these models are developed? Where do those biases appear from, and also what are the bottlenecks to solving them?
Yeah, there are several key elements for developing a model. So firstly, on algorithm, actually is mostly transformer-based for the language model, and for the media model, or we call it generative media model, it's now mostly diffusion-based. It's two architecture. And on the architecture level, so first, now we are developing new kind of algorithm, or called architecture, to make it more computing efficiency, both for training and for inference. And that's on the algorithm side. And second pillar is data. So data now, it's not all about quantity. It's about high quality. So for example, for each verticals, what we need is really the top-notch professionals to provide their know-how, provide their chain of thought, their thinking logic, and put into the data. So for example, if we want to improve the math capability, we have two Olympic math medalists in our firm to make this data work. So the data, the quality is over quantity for now. And third, you have an organization to iterate faster to make it work. So on the model training side, we see there are still really long runway to go, and we have many low-hanging fruits right now. For example, so everyone knows the scaling law of pre-train, and now we have the scaling law of post-train, driven by the technique called reinforced learning. If you may have tried the O series model or M series model, it has a syncing process. And this is only at the very beginning. So the training process of this reinforced learning post-train stage only takes several weeks for now. And there is huge runway to scale it up. And also, for different modality of models, and now we are at the tipping point. We are close to the tipping point to see the different modalities will converge, will integrate into a more intelligent and more modality model. So we have a lot to do.
Okay, you've got a lot to do. If you can realize some of those objectives, though, what do you see as being the potential of AI in finance? Because I know you take maybe a slightly longer term perspective of the way that it could develop as well.
Yeah, for the past, we've seen, so if we name the difference in testing level from L1 to L5, L1 is chatbot, L2 is Glasner. For the past, we are already very familiar with this chatbot-like applications. You can ask questions, you can do search, right? And now we are moving to L3, which is agent or agentic AI. The key difference is the agent itself is not just a tool. So it can deliver final work. So just like real human, it can search for external information. It can use all different kinds of tools. For example, it can use browser. It can use computer. There is a virtual machine behind the agent. It can access the data within the company, and it can deliver the final deliverables. So for the finance industries, personally, I do many financial analysis on daily basis. Now I'm using our agent product called MiniMax agent to write financial analysis reports. And for example, for the KYC process, it can now automatically do coding very, very fast. So it can automate many generalized workflow. And the difference is you don't need a task-specific model for each different tasks. You only need one model and an agentic product to do the coding, to use different tools to do this all different kinds of workflow. It's generalized model. So I think the key difference is it becomes a co-worker with you, not just a tool.
I just thought it's interesting. I'll bring it to life with an example, which is a bit of an anecdote. I'll give you a little secret, but I think people will find out anyways. So I just mentioned earlier we got over 1,000 use cases, which we narrowed down to 100-something validated things. Who curated this? Not me. No human, actually. It's an AI agent who's doing the curation. Who is doing the curation? I don't know. And then when our engineer was showing me the curation process, I had a hunch. I was looking at a screen and said, "Actually, you didn't write this code, did you?" And no, of course, all you're going to get from me is black and white. Don't you see this green and pink? This is AI-generated code. Yeah. So, in other words, AI is generating the code for the agent, which is creating the AI use cases.
Yep.
Right? Bring it to life, what you just mentioned in practice. Right?
I think sometimes also the way people's mind works, when you hear co-worker or agentic AI, it also makes you a little nervous about possible job cuts. So Ian, what's the mood over at HSBC on that front, and how are you advising people as well that are facing these massive AI changes or AI-led changes?
Yeah, I'll talk a little bit about my thought on AI agents and then jump into that as well. I think today, many of the use cases in industry are ask a question, get an answer, and the next wave will be delegation and supervision, which will be very exciting. But I do think broadly in industry, this will not be the year of agents, this will be the decade of agents. We're in 1999, maybe, of the internet, and there's a lot of hype, and the hype is there for a very good reason, but it is very early days, and it will take us a decent amount of time to actually get to a world where we are doing more delegation and supervision. If you actually look into any enterprise in any industry right now about what use cases are truly agentic in the sense that they are goal-oriented, not guardrailed, and rewarded based on success, it's very limited, right? They instead are really defined to the use case. And so when I think about AI in the context of our employee base or a large enterprise, AI is really about removing all of the work that you don't enjoy. The simple tasks that don't take the brain power, the complexity, the spontaneity, all of the work that I think we do in a 40, 50, 60-hour work week, I would probably make the case that at least 30 of that is more administrative. And if we can enable employees to really get to spend their time on more impactful things, it'll be a better work environment.
Esther, I saw you smiling there, so what's your view on that?
Yeah, I mean, I was about to say I agree with Alex, because right now we are at the age of AI 2.0. So what I mean by that, AI 1.0 is when Google first published the paper, attention is all you need, so all the transformer-based AI algorithm is starting, hence you see the explosion of OpenAI, Anthropic, MiniMax, likewise, right? So the main use of AI at AI 1.0 are mostly AI scientists, because the goal of that is to create the LLM, foundation model. Now, AI 2.0 is when people like us start to use AI. So we'll be like, okay, we can ask ChatGPT, what is the hottest restaurants in Hong Kong? Where can I take my daughter for school project research, things like that. So we are still, the human is the main use of AI, but I think in a few years' time, AI 3.0, the main use of AI is actually AI itself. So the AI agent itself with the main use of AI. So with that in mind, it will bring a revolutionary change of how we perceive AI and also how we perceive finance. Because at that time, when our agent is the main use of AI, they can represent us to do a lot of financial transactions. Now, right now, all the financial transactions, let's say if I use my credit card, or if I go to mainland, I use my WeChat Pay, or use my Face to pay, the process itself is pretty darn long. Think about it. But when when my agent is talking to Alex's agent, I say, okay, what should we do for, I don't know, whatever, like exchange of an idea. I will give you a certain number of credit just to exchange that idea. That transaction can happen 1,000 times per second, 1,000 times transactions per second. And then is the ultimate marriage of AI and crypto and blockchain. That would happen, regardless whether you like it or not, in, say, 5-10 years' time. So I think we're here in Hong Kong FinTech Week. A lot of talk is about AI, but also with crypto, with blockchain. For the longest time, all these talk on blockchain and crypto feels a little bit premature. But I felt that this is the year, or maybe we are starting to see some genuine real-world application of that. And I do believe that AI in the future for all kinds of agentic transaction will take a very big role.
I'm just going to say spot on, and spot on. Obviously, be the a voice of finance, whatever finance means these days. It's voice of finance to sort of echo this. Remarkable how this is about AI, and then another panel was about digital assets, and it's almost like this separate conversation.
Conversation.
It's one and the same conversation, right? Yep. So you have to, and to bring to life why it is one and the same conversation, you have to imagine AI being a user of AI, transacting in a Web3 environment using coins. Well, coins need to move, need to be settled, need to be safeguarded, need to be financed, and that's where finance next gen comes in. To operate digital assets in a Web3 environment with the use of AI, where the biggest users of, say, stable coins, or coins generally speaking, will be AI agents doing things. Right. And so it really is the same conversation. And you might think it's not happening today, it's a little visionary. Well, I don't know, 2 billion gamers on the planet, right? It's not that far off. It's not that far off, where people are really doing things in a completely immersive environment, which financial services better learn how to operate and live with, because this is the world we're in.
Yep. Ian, what's your view on that, the intersection or the evolution of FinTech and AI together, or digital finance?
I think I largely agree, but there's probably one spot where I don't. And I think it's really the horizon. I think the saying is that humans often overestimate what will happen in the short term and underestimate what will happen in the long term. And I think that we are in the very early innings of this. And if you look at recordings from 3 years ago even, around what the world would look like today, we are not there, right? When the ChatGPT moment happened a few years ago, there was talk of a very different world in 2025, and I frankly think we actually haven't gotten there. There is still a lot of foundational work to do in this space. I think we absolutely will get to the world that my two colleagues on the right are talking about, but it will take us a lot longer than 5 to 10 years to get there.
Mars, then let's also think about the competition, I guess, and the evolution of Chinese versus US models, because we talk a lot about the race between both countries to reach AGI, for instance, even if that's possible. But what do you think about the possible gap, and how much is that closing, do you think, as well?
Right. Yeah, a very key question on this. So we look at this different gaps between China and US in 2 tracks. So for the first one is the language model. So in language model, US players, the leading 3 players, they are still taking the lead. But the time gap between the US ones versus Chinese ones now are quickly narrowed. I should say, frankly speaking, is less than 1 year. And maybe if you ask me this time gap 2 years ago, the gap will be more than 2 years. So during the past 2 years, we quickly catch up and narrow this gap. That's the first track. And second track is about generative media model, like video model, audio model. In this track, I will say there's basically no generation gap. We quickly catch up, and now is advancing this modality, this generative model modality together with all the leading global players.
Mm-hmm. We've got a few minutes left, so I think we can probably end with some projections from each of you, because as we started off today talking about how AI is very much the flavor of the moment. I know on Bloomberg we're talking a lot about the AI hype and this bubble, and whether it's really a bubble, whether if it does pop, what would be the thing that makes it pop. But I'm interested from each of you, what is the AI technology you're most excited about in the coming 12 months, whether you think that AI bubble is going to burst possibly, or whether it will deflate slowly. What's your general projection of where we go from here?
Right, so I will make 2 projections. The first one is about productivity. So we've seen some verticals that has, the capability of model has been approaching the real top-notch professionals. For example, for coding, now in our company, over 70% of the codes are written by large model, by our M1, M2 models, which means for each developer, each coder, programmer, their individual productivity actually tripled, more than tripled. So for this kind of penetration and productivity improvement, we should expect that we will see this will happen in each of the vertical. The capability of models intelligence will approach the top-notch professionals in each vertical. That's my first forecast. And the second forecast is about creativity and entertainment. So now our familiar use cases for AI, for foundation model, is mostly for productivity. And starting from maybe next year, we will see more and more use cases for entertainment and creativity. Games. For example, for the AI content generation, the AI-powered companionship, and etc. So that will be taking off. Yeah.
I'll agree on both of those, and I'll maybe add contact centers as a third domain that I think will radically feel different in many different industries on top of the 2 mentioned. I'll also say that I think one area that will progress in the context of enterprises will be evals and monitoring. So I think large language models do that relatively well today, but doing that in the context of a use case is going to be key to unlocking value, and we're going to see that space continue to progress in 2025.
Mm-hmm.
So I'm going to make 2 predictions that is not necessarily fintech related, but within the next 5 to 10 years, I'm convinced that we can cure cancer. As a matter of fact, AI has never been so effective in terms of trying different form of protein folding and unfolding. Cancer is nothing but a mutated protein. That's why last year the 2 Nobel Prize in Chemistry both went to AI for protein prediction. I am convinced that humanity can overcome cancer in 10 years' time. So number one. Number two, I'm also convinced that, and you can mark my word for it, in 10 years' time, most of the data center, right, currently we have a data center building frenzy. I just came back from FII. The whole Saudi is talking about building data center. The whole US is talking about building data center. $1 trillion has been spent on that. In 10 years' time, most of the data center will be built, will be in space. Will not be on Earth, but will be in space. Why? Because data center on Earth occupies too much land, occupies too much electricity, wasting too much money on water, and also completely inefficient. So if you do in space, solar is free, temperature is minus 250 degrees, you don't pay for the land, inferencing super fast. So in 10 years' time, data center in space, and we can cure cancer.
Right, well, first, it's a great point, of AI as a force for good. You mentioned healthcare, and I'm thinking about education, which are the 2 most important things society can do for themselves. So AI in that context is a great thing. My predictions would be going back to the debate on timelines and evolution. I think we can debate 2 versus 10 years, but the one thing I don't think we can or should debate is the fact that whatever happens, it will not be gradual and linear.
I agree.
Nothing happens in the world this way. The human brain is conditioned to function this way, but nothing happens this way.
Yep.
It will go whoosh,
yes.
Right? It will go exponential. When exactly, don't know. What whoosh means, don't know, but it will go whoosh. Why will it go whoosh? Because at some point, we, humans, and organizations of humans will understand that it is cheaper, it is faster, and importantly, it is easier than we think. So we might as well get on with it.
Yep.
All right, perfect. Well, that was Alex, Esther, Ian, Mars. Thank you very much for joining us this morning. Really great insights on AI and the human role in finance and more. All right, round of applause.
Thank you.